Today I'm going to talk about stock. Um, I think in long term, this stock should do very well. There's a couple of ways we can play the stocks, and I'll talk about different way. So who doesn't love pets or who doesn't love dogs? I guess everyone does. Black, white, brown, pretty much everyone. Teenager, toddler, old people, everyone loves dogs or everyone loves pets. So we'll talk about a company. So before we get into details of STIC and what are the ways we can buy, let's talk about the company that it's merging with, Bark, right? So it says Bark serves over 1 million dogs monthly through Bark Box, and it's pretty much a subscription model. And it also talks about projected revenue of approximately $365 million, gross margin of approximately 60% from physical year ending March 31, 2021. That's 179% year over year increase in revenue. And if we check another report from February 16, 2021, we can see that the revenue, at least they give some details about their physical order 2021. Revenue for the quarter grew 78% to an estimated 105 million. Subscription shipments grew 47% to 1.1 million. I think that's a pretty good number. The company is pretty much very small if you look into the valuation. It's a pro forma enterprise value of about $1.6 billion compared to Chewy, which is about $34 billion. So I'm talking about the company from today. If it can just go 10, 20% higher, it could do very well. So if I look into their active subscription, 1.7 million, which is not bad, 7 million customer, there's 11 million contacts, and there are a few more partnerships. So they do have their own park site that you can pretty much buy everything from there, their subscription model. But one thing I really like is they have partnership with Amazon, Target, Costco, Petco. So they are not directly going after Petco or any other company, and they have two, actually three of the biggest company, right? Amazon, Target, and Costco. That's what I like about this company. Now let's look into their price. I mean, STIC, which is the margin company, as soon as the margin news came out, it jumped from like $12 all the way to $18, and then it was steadily going down, and it was holding kind of at 14, 15 until the whole market correction, at least for the growth stock, came in February. It started going down right here, downhill, and then started coming back up again. So you can technically buy the stock right now at 11.38 or whatever the price is going to be to, the day you want to buy. Or if you think you don't want to take a big risk. Let's say you don't have $1,000 to buy 100 stocks and you want to go low or and you want to see what happens. There is a something called an SPAC warrants. Um, I don't want to go into more details, but basically one warrant kind of equals to one stock. So what you're doing is pretty much similar to option. You're buying today, let's say 100 warrants at 369 per warrants. It will give you, once the warrants redemption comes into the picture, you can redeem 100 stocks at $11.50. Warrant typically price goes a little higher. If you see yesterday it went up by 4% versus the stock went up by 0.53. So you can play this route too, that hey, I want to buy but I'm not sure or I don't have money. You can buy this as well. And then there is another thing called unit. I don't want to get into it, but it's a little bit more details. I have a separate video for SPACs that talks about um, how warrants unit and the stocks works. But hey, here's the thing. I love it. I currently own STIC. I think it's a great company, and I think it's gonna do very well in long term. Um, so have a good day.